Management, and today I'm joined by Clint McLaughlin and Stu Hughes to discuss today's USDA report. On today's report, numbers were released for world and U.S. grain ending stocks, along with an estimate on the 23-24 U.S. production. We also got an estimate on this year's corn and soybean yields. Stu, would you like to start us out today and cover the U.S. numbers?
That sure will. We'll start off with the U.S. old crop numbers. Expectations were for ending stocks to be raised about 50 million bushels. USDA took them up 75 million, ended up with a 1.41 old crop ending stocks number. And the way they came about that was all in exports. They took exports down 75 million, left feed alone, which maybe doesn't surprise me. I've been hearing that maybe the March 1 stocks number was a little bit high, so maybe this feed usage is a little better than what USDA thinks. Maybe the bigger surprise on the old crop side was that they did not take ethanol demand down. Ethanol grind's been running 2 to 5 million bushels a week below the needed pace, so maybe a little surprised that USDA is not backed off the ethanol demand. So they must be a little optimistic yet for the upcoming driving season. Today was the first stab at the 23-24 corn ending stocks, and it's more of an educated guess than anything, but they did actually come out with the trend line yield 181.5. That's going to be a record yield. Can we get there? Sure. A lot of things got to go right to have a record yield, but today that's the number that they're gonna use. And they just used the March acreage number. We all knew that was going to be 92 million. Demand wise, they did take total demand up about 750 million bushels. A little bit more on the feed. Ethanol up 50 million. They took exports up 300 million, 325. Took feed demand up 375 million bushels. So it does make some sense. You're going to have a bigger supply, a lower price, so it does make sense for them to increase demand. So there are a lot of moving parts, a lot can change between now and then. But bottom line was they came out with a 2.22 ending stocks number. Trade was looking something closer to 2.0 billion. So that was fairly negative. Right after the numbers came out, you saw July corn down 8 or 9, and probably 2 minutes later we were up 9. I think old crop corn got buoyed by the higher wheat numbers here, or the lower production of wheat for next year. So I think Kansas City wheat was up 30 cents at one time here this morning. So I think old crop corn got a boost from that. That old crop July September spread, I think, actually got close to the contract high today. So old crop basis still fairly tight. So I think it's getting magnified here today with D's corn poking out new lows and old crop corn kind of holding its own here. Bean wise, old crop stocks, they took those down, or took the old crop stocks actually up 5 million. They were looking for them to be up maybe 3 million. So not a big deal there in old crop bean stocks. The only change they made was they actually took imports up 5 million. So, and I think there's been maybe 2 vessels hit the East Coast here in the last 60 days from Brazil. So nothing unexpected there on the old crop beans. New crop beans, they used the March number for acres, 87.5 million. They did use the 52 bushel trend line yield. I believe that'll be a record yield. They took crush up 90 million for next year and reduced exports 40 million, which sounds reasonable with a good sized Brazilian crop that's probably going to keep everybody well supplied here for the next 6 to 10 months. So I think that was the B numbers were reasonable. Carry out next year is projected to be 335 million, and I think the trade was looking for something more in the 295 million area, so about 40 million higher than what the trade was looking for on ending stocks here for next year. And that's kind of seeing the same thing in beans as you are in corn. Old crop only down 15 cents here at the moment, and November down 21. So overall, nothing really unexpected, although the estimates were all, all the trade estimates were on the low side here. So negative report, I think a lot of it was already dialed in here, but is interesting to see July corn actually trading higher here today.
All right, thank you, Stu. Clinton, can you give us a breakdown of the world numbers from today's report?
Sure can, Brenda. Yeah, so not much help from the world side. Pretty much everything here was negative, as well. Start with the production, so this report really has two things in mind here. We got ending stocks for old crop and new crop, as well as, Brazil and Argentina production. So on the production side, starting in Brazil, our corn was last month, they came in at 125 million tons. Last month, trade was looking for 126. We came in at 130, so an increase there. Soybeans last month, we were at 154. Trade was looking for 155 and some change. Came in at or 154.7. We came in at 155, so not grossly above last month, but nonetheless still above last month. Argentina, they were very drought stricken, so they had some pretty significant problems throughout the year and caught a lot of headlines. But it looks like we might have ratcheted that yield down just a little too low, and now they're kind of raising it back up off of its lows. Last month we were at 37. I guess in this month we came in at 37, but the trade was looking for 34.9. So I guess USDA is just really not ready to get to where the trade is just yet. Soybeans, last month we were at 27. It was also left unchanged at 27 this month, but trade was looking for 24.2. On the old crop ending stocks, everything was above expectations, but pretty well in alignment. The corn, we were looking at 295, came in at 297.4, so nothing drastic there. Soybeans, they were looking for 99.1. We came in at 101.4. Wheat, similar situation, looking for 265, came in at 266. So really nothing catastrophically huge there, but again, the trend just continues where everything is slightly above expectations, and no surprise that new crop ending stocks would be the same situation. On corn, we were looking for 307. Trade guess was 307, came in at 312 on corn. Beans was actually a pretty big increase from 107 expectations up to 122.5, and wheat came in at 264 and trade was looking at 265. So, a lot of this, we're towards the tail end of the production season down there. Won't be long. They're planting winter wheat now in parts of Brazil and Argentina. So they'll be doing that. And, here before too long in the months ahead, we'll be back to, another crop for them. And with these kind of prices, even with things tailing off, you would have to anticipate that acres will be big up there. And so I guess the moral of the story from my perspective is world ending stocks and world production is continuing to get more favorable. It's getting larger, and if without some significant weather issues, I'd look for that pattern to continue.
Thank you, Clint. At this time, I'd like to open up the conversation. If you guys want to discuss any other numbers from today's report or discuss how progress is going, what you're seeing out there and hearing right now.
Guess I didn't really see anything that really stuck out today, except for I was a little surprised they didn't make any adjustments to Argentina today. I thought they would at least modestly lower some of those production estimates, but yeah, they elected to punt until next month, I guess.
Yeah, you had mentioned the Kansas City wheat spread. That thing ran out clear out to $2.42, Kansas City over July today. We started today down around I'm looking here. Yeah, the low was 211 before the report, stretched it out to 247. At one point, Kansas City wheat was almost limit up. It got up to $8.99.5 in the July. It's currently up 37 at $8.79. So it's been on one heck of a run, and today looks like it really gave it some gas. It started to back off. We were 20 cents off the high or better, but looks like moving here towards the close, it's creeping higher, which would be good news for guys that have the wheat to sell. Now a lot of these guys I think are going to be in a position where I don't know how much they can actually sell ahead of time and take advantage of these prices, because the strength is also coming from a significant amount of problems out there. So definitely have that going on in the Kansas City belt, which also kind of gets you wondering, over the past several years, a lot of this national yield on the corn, soybeans, and milo yields previous years where we had some really good yields, 2016 through say 2019 and 20. We had pretty good national yields, and a lot of that was coming out of that Kansas, Nebraska area. They were having some pretty good yields then, and so with the winter wheat in this much trouble, they're going to need to see continued rain out there to get the soybean and corn yields up where they need to. Granted, the eastern half of Kansas has been doing pretty good on the rainfall. It's the western half that's really struggling there.
Okay. Well, thank you guys for both joining me today. And thank you to everybody for watching. Remember to watch our Facebook page or visit our website, MidwestMarketManagement.com, for more news and information. Hope you all have a good weekend.